Good day, Junior Tickies. I'm Mrs. Brimacone. We're going to look now at Activity 2. The focus will now be on the periodic inventory system, Pro Sport Clothing. The business sells sports bibs and uses a markup of 65% on cost. The business makes use of the periodic inventory system. Required, list the advantages and disadvantages of a periodic inventory system. If you remember back in Activity 1, the focus was on a perpetual inventory system where you needed to list the advantages and disadvantages using that type of inventory system. Now you will see it will be similar types of questions, but it will be based on the periodic inventory system. 2.2, show the effect on the accounting equation. Show an increase with a plus before the amount, a decrease with a minus before the amount, and no effect with a zero. Note, do not show the net effect. The business has a favorable bank balance. That is important to understand when you're doing the accounting equation. Because if the business has a favorable bank balance, then bank, if any payments is made or any money is received, it's regarded as an asset. If it said unfavorable bank balance, then it means that bank would have been regarded as a current liability. 2.3, complete the following ledger accounts in the general ledger, the trading stock, the purchases account, and the trading account. 2.4, calculate the cost of sales on 30 September 2022. 2.5, calculate the markup percentage achieved. Comment on the markup percentage achieved. Should the owner be satisfied, provide possible reasons for the deviation. And 2.6, calculate how quickly Pro Sport Clothing convert their stock into cash. And then they provided you with information with the opening balances and totals and transactions for September 2022. Starting now with 2.1, where we need to list the advantages and disadvantages of a periodic inventory system. If we first look at the advantages, it's less time consuming, maybe cheaper to administer than the perpetual inventory system, suitable for business where it's difficult to determine the cost of an individual item. Disadvantages, there's less control over stock, over our trading stock. Available trading stock can only be determined by a physical stock count. I've got nothing to compare the physical stock count with, so it's difficult to see if there is any stock missing when we're using this type of system. That's why a disadvantage. Theft is not detected because no movement of the trading stock is recorded in the trading stock account. The value of the physical stock take cannot be compared to anything. So this is the downside of using a periodic inventory system. Question 2.2, show the effect on the accounting equation. So if we now look at the transactions, and remember the business as a favorable bank balance. When we start now, before we're looking at the transactions, remember dead click. This is a tool that you can use if you're not 100% sure what effect will it have on the accounting equation. The first transaction, purchased trading stock and paid $42,000 by EFT. Now when the payment is made, it will always be recorded in the CPJ. From the CPJ, bank is always going to be credited, which means now in a periodic inventory system, the purchase account is going to be debited. To show the effect on the accounting equation, purchases is regarded as an expense. If my expense increase, it means it has a negative effect on the owner's equity, and a payment was made, so my assets will be minus. Number 2, paid 3,950 cash for the delivery of goods purchased. In a periodic inventory system, if a payment is made, it will still be recorded in my CPJ. Bank is going to be credited, but now we're going to open up carriage on purchases. There's no movement of trading stock recorded in the trading stock account. Any additional cost in getting that trading stock will not be added to the trading stock account. We need to open an expense account for that, and that will be the carriage on purchases. Carriage on purchases is regarded as an expense, so if my expense increase, it will have a negative effect. A payment was made, so bank will be minus, assets minus. Number 3, total cash sales 182,338. Customers were granted 10% trade discount on all cash purchases. So it means they paid 10% less than the original selling price. Now, in a periodic inventory system, the cost of sales is calculated right at the end. So it means that the only thing that will be recorded is the selling price. This is cash sales, which means cash receipts journal. From the cash receipts journal, bank is debited, sales is credited. Bank is regarded as an asset because we have a favorable bank balance, so my assets will increase, my income will increase, which means it will have a positive effect on the owner's equity. Number 4, stock purchase on credit 147,600 and paid 28,110 for import duties. So first, what is happening here? When we're buying on credit, it means we owe money to our suppliers. It will be recorded in my creditors journal. From the creditors journal, creditors control is always going to be credited. Now, account debited, stock was purchased, which means we need to open up the purchases account. Purchases is regarded as an expense which will increase, which has a negative effect on my owner's equity, and my liabilities is going to increase. Now, import duties must be shown. It's an expense in a periodic inventory system that incurred in getting that trading stock, which means that creditors control is credited, account debited, import duties. Again, import duties, an expense. If my expense increase, it has a negative effect on the owner's equity, and my liabilities will be plus. Transaction number 5, credit sales to customers 274,200. Credit sales means we sold goods on credit, which means it will be shown in the debtors journal. We sold on credit, money is owed to us, and those people, those customers who owes us money is called debtors. So debtors control will be debited, account credited, sales. Debtors control is regarded as an asset, so plus. Income will be plus, which means it will have a positive effect on the owner's equity. There's no cost of sales in a periodic inventory system. It will only be calculated later on. Number 6, the owner took stock for promotions. The cost was 23,780. So he took stock from the business, but it's not for personal use. It was for promotions, which means that we need to open up advertisement and the purchase account. This will be recorded in the general journal. Advertising will be debited and my purchase account will be credited. Now, advertising and the purchases account is regarded as an expense. So if my expense increase, it will have a negative effect on the owner's equity. If my expense decrease, it will have a positive effect. Nothing with your assets, nothing with liabilities. Number 7, stock return to the suppliers. So it means that we've decided we want to return stock which we've purchased on credit to our suppliers. This will be recorded in the creditor's allowance journal. And from the creditor's allowance journal, creditor's control will always be debited. Account credit now is the purchaser's account. Creditor's control is regarded as a liability, purchase as an expense, which means it will be plus 27,812. Because my expense decrease, it will have a positive effect. And liabilities minus. Number 8, stock returned by customers 14,100. So if customers returned goods to us, it means that they owe us less money. This means it will be shown in the debtor's allowance journal. Account debited, debtor's allowances. Account credited, debtor's control. My assets is going to be minus because they owe us less money. My expense, debtor's allowances, is regarded as an expense. If it increases, it will have a negative effect on the owner's equity. There's no cost of sales entry. Cost of sales is only calculated at the end. Number 9, goods purchased for 5,670 was incorrectly recorded under sundry expenses. So we need to make a correction. All corrections is done in the general journal. So what is happening here? Goods were purchased and was incorrectly shown as sundry expense, which means sundry expense will need to be credited so that the purchase account can be debited. Account credited, sundry expenses, both is classified as an expense, which means if my expense increase, it will have a negative effect on the owner's equity. If the expense decrease, it does have a positive effect on the owner's equity. Nothing with your liabilities. Number 10, the owner returned stock taken for personal use with a cost of 850. So the owner took from the business, but now decided that he's going to return that, which means that in my general journal, the purchases will now be debited because the owner returned the goods. Drawings is credited. Drawings is regarded as an owner's equity. It will have a negative effect. The drawings is minus, but because it's minus, it will have a positive effect on the owner's equity. The purchase account is an expense which will be debited. If my expense is debited, increases, it has a negative effect on the owner's equity. Now we need to use all the transactions that we've just completed in the accounting equation, and we need to complete the ledger accounts. So starting now with the opening balances and totals. Trading stock is regarded as an asset plus minus, purchases expense plus minus, which means that the balance brought down will appear on the debit side for trading stock, and the total brought forward for the purchases will be on the debit side. Now the only items that's recorded in my trading stock account is my opening stock and my closing stock. So that balance brought down of 38,217 must be taken to the opening stock account. So trading stock is going to be credited and opening stock would have been debited. Starting now with all the transactions, looking at the first one, CPJ, we've purchased trading stock From the CPJ, the purchase account is going to be debited. My details is bank 42,000. On day 4, goods were purchased on credit. From the creditor's journal, my details is creditor's control, and the total 147,600. Then transaction number 6, from the general journal, trading stock was taken for promotions, for advertising, which means that my advertising account is going to be debited, account credited, purchases account with 23,780. On day 7, goods were returned to the supplier, which means from the creditor's allowance journal, my details is creditor's control, and the amount 27,812. Then we had transaction number 9. So we're looking for everywhere where we actually see the word purchases. Day 9, sundry expenses was incorrectly debited, and we needed to correct that by crediting the sundry expenses so that the purchase account can be debited. And the amount 5,670. And then we had the last one, the owner returned trading stock which he took for personal use on the debit side from the general journal, 850. Once we've taken all the transactions from the accounting equation and we've posted it to the purchases account, we can close off the purchase account. This is an expense account which is closed off to the trading account. If you take the credit side, the total minus everything there, that becomes your balancing figure, which will go to the trading account. Now, the last transaction, after taking all of the above into account, the physical stock count on 30 September 2022 revealed stock of 27,800. It means that closing stock, which is an expense, would have been credited, can also be regarded as an income. But closing stock is going to be credited. Account debited for trading stock account. So we've got 27,800 left over. If I now close off the trading stock account, we have a balance of 27,800. The closing stock at the end of last year or end of September will become my opening stock in October. Now, if you're not 100% sure, please refer to the theory booklet. The trading account in a periodic inventory system, this is what you need to study. You would always have on the debit side the opening stock plus purchases plus carriage on purchases plus any other additional cost like custom duties or import duties. Any additional cost in getting that trading stock will be added. On the credit side, we would always have sales and a reminder, debtors' allowances must be closed off to the sales account. And then we'll have our closing stock. Make sure that you study the trading account with a periodic inventory system. So if we start now with finding our opening stock and our closing stock, we can get that from the trading stock account. The opening stock was 38,270 and the closing stock was 27,800. If we're now looking at our sales, remember, debtors' allowances is closed off to my sales. Sales consist out of cash and credit sales. So from the cash receipts journal, our total sales, plus from the debtors journal, our total credit sales, minus the debtors' allowances equals my total sales. Our total purchases was calculated in the purchases account. Remember, we took the debit side minus the credit side. This is an expense account which is closed off to the trading account. So make sure that you use the answer that you've calculated in here and you transfer it correctly to the trading account. Transaction number 2, we had carriage on purchases, 3,950, and then if you look at transaction number 4, import duties was 28,110. Once we've taken all the totals to the trading account, we can now close off this account. Start by the credit side, add everything on the credit side, minus everything on the debit side. That is my gross profit, which will be taken to the profit and loss account. In question 2.4, they've asked us to calculate the cost of sales. Now you've actually got two options. If they've asked you to do the trading account, from the trading account, if you take your sales minus your gross profit, it will equal your cost of sales. Opening stock plus purchases plus carriage on purchases plus import duties minus closing stock equals your cost of sales. So now they've asked you specifically to complete it in this format. So again, to calculate your cost of sales, it's your opening stock plus the purchases plus carriage on purchases plus any other additional cost, which is now import duties, equals cost of stock available for sale. What do we need to subtract from that? Our closing stock. It must be shown in brackets. That equals my cost of sales. Make sure that you know this calculation. Question 2.5, calculate the markup percentage achieved. To calculate the markup percentage achieved, we need to take the sales minus cost of sales, which is equal to your gross profit divided by cost of sales times 100. So we've calculated in our trading account the gross profit, which is taken to the profit and loss account. Note that this represents the gross profit divided by the cost of sales, which you've calculated, times 100 equals 70%. Now, right in the beginning, they said the business has a markup percentage of 65%. So comment on the markup percentage achieved. Should the owner be satisfied? Yes. The business did achieve their aimed markup of 65% on cost. So now possible reasons. Think about reasons why we do not achieve our aimed markup. And if we now did achieve our aimed markup and it was even better, then you just mention the opposite. This means less trade discount were given to customers, better controlled sales at lower prices than intended, less mistakes on source documents or in the books, better control over our trading stock. So those are all possible reasons. If we look now at 2.6, calculate how quickly Pro Sport Clothing convert their stock into cash. When you see this type of question, you should always know that this talks about the stock turnover rate. And when we want to calculate our stock turnover rate, we need to take our inventory, and they didn't specifically set the closing balance or any of that. So when we're looking at that, it's always our average inventory, which means it's the beginning plus the end divided by 2. So here we've got now our opening stock and we've got our closing stock. We also need our cost of sales. Here we've calculated our cost of sales. This is why we're using this table now for us to complete 2.6. So we start with the cost of sales divided by your average inventory, that equals 7.9 times. Again, make sure you go through your theory booklet. Periodic inventory systems is new to grade 11 learners. I want to leave you with this quote. The beautiful thing about learning is that no one can take it away from you. Next, we're going to do activity 3. Have a wonderful day.